Hello everyone, my name is Nishit Nakrani and today I'll be presenting my accounting in headlines project. So my topic focus on the Coldplay concert, Music of Sphere World Tour, one of the most successful entertainment ventures in recent histories. I'll discuss how Coldplay Tour illustrate key financial transactions and how accounting principles such as revenue recognitions and matching principles applies in real world business decisions. So, Musical Sphere World Tour begins in 2022 and continues through 2025, generating over $617 million dollars in ticket sales and more than $1.5 billion dollars in total projected revenue across more than 100 shows worldwide. According to the Predict HQ and Chronicle reports the tour not only boosts the Coldplay revenue but also has major local economics impact, with one show in Seattle generating over 5.8 millions in local spending on hotels, restaurants, and transport. From an accounting perspective, Coldplay management team had to accurately record revenues, expenses, and advance payments to ensure transparency and compliance with the international accounting standards like GAAP and IFRS. So, talking about the first transactions, advance payment to promoter. So, before the tour begins, the promoter pay Coldplay Limited an advance of $50 million dollars to secure the performance rights and concert scheduling. The journal entry would be here for the debit cash of $50 million dollars and the credit would be unearned revenue of $50 million dollars. Now, this means the Coldplay has received cash but hasn't yet earned it. The cash increase has the asset aside, while unearned revenue is recorded as a liability showing an obligation to perform concerts in the future. This reflects the revenue recognition principle, which states that income should be recognized only when it is earned and not when cash is received. Talking about the second transaction, which is about ticket sales and performance, so once the concerts are held and Coldplay performs, the company can now recognize this revenue. Here the entry becomes like for unearned $50 million dollars debited and credit for ticket revenue of $50 million dollars. This reduces the liability and increases the equity through earned revenue. It ensures that income align with the period when the performance actually occurs, providing a more accurate picture of a profitability. Uh, the third transaction here, operating expenses and profit share. Here it covers operating costs such as stage productions, travel, crew salaries, and sustainability efforts, estimated around $15 million dollars for a major show segment. Here the entry for our journal would be debiting around like tour expenses for $15 million dollars and credit would be for cash $15 million dollars. Here, Coldplay records expenses when incurred, not necessarily when paid, following the matching principle. Now, this principle ensures that expenses are matched when the revenues they held generate. So, the statement accurately reflects the net profit. Moving to the financial analysis and accuracy, now let's analyze the accounting accuracy. Now, this transaction maintained the fundamental accounting equation, which is assets equal to liabilities plus equity. When Coldplay receives an advance cash asset increase and unearned revenue liability, which increase equally. When the performance happened, the liability decreases and equity increases. And when expenses are paid, cash decreases and expenses reduces those net income, but overall equation stays balanced. Coldplay approach adheres to accrual accounting, providing a fair and consistent portrayal of its financial health. In many entertainment cases, advances or pre-sales are incorrectly recognized as revenue too early. Coldplay accountants avoid that mistake by deferring the recognition until performances occurs. Now, this accuracy builds the investor trust and regulatory compliance, especially important when tours span multiple countries, currencies, and fiscal periods. Thank you, everyone. And here are the references that I have used for my slides and presentation.